Hi all, this is Steve Murray, the Market Chartist on behalf of ForexFraud.com. And when I look at this disparate views in here, or a shifting correlation view for US dollar, Canadian dollar, and the price of oil, particularly here on the Brent crude contract, but a very similar outlook for the WTI as well. So we're going to take a look at both these markets. This underlying, so they had this strong secular bull running here all the way from 2014 through to early 2016 here. This dollar CAD move higher, that's Canadian dollar, so US dollar strength, Canadian dollar weakness. Why do we see this Canadian dollar weakness? Well, if we go to the Brent chart, we had that sell-off in here. If we go back here longer term on the chart, the sell-off on dollar CAD in here all the way from 2014. In fact, if I go and take a look at the weekly chart here or the monthly chart on the log scale, the monthly chart in here from 2014 2016, this sell-off in the oil price from over $100 to down to $30 in here, seeing the Canadian dollar also selling off, and that's reflected if we go to this chart here, back here to the dollar CAD rally. Dollar CAD higher, dollar higher, Canadian dollar lower. So that moved there. Then we had this strong turnaround in here, dollar CAD lower right from the middle of January, and that was consistent with, we go to the daily chart, this rebound in the oil price from $30 in here back up to nearly $50 last week. So that rebound in here reflecting that correlation as well. So an inverse correlation between US dollar, Canadian dollar, and the USD CAD chart and the Brent crude, or even the WTI crude chart in here. Okay, so, but that correlation, as you can see, more recently breaking down. So the Brent crude in here from the beginning of May, so we had a little setback in here through early May, but then a strong rebound to new recovery highs, nearly getting to the $50 level, pushing through this April peak, pushing up to resistances here, pointing Brent crude higher. So that's Brent crude higher, traditionally back on that correlation. That should see US dollar, Canadian dollar back lower in here, so it should help the Canadian dollar. So we should see Canadian dollar strength, which would be USD CAD lower. However, we've seen a further up push higher in USD CAD over the last couple of weeks. So this latest push higher has been along with this this crude oil push higher. So we're getting there a direct, before an inverse correlation, now a direct correlation, and that really leaves risk there for dollar CAD still back higher. And we've got some key levels here. Should we break 132.18, it creates a base structure and neutralizes the bearish theme. If we continue up through 132.96, then we see a more bullish shift, and this market can certainly push significantly higher, particularly if crude eventually rolls back down lower from here. So if crude goes back lower, we could see that correlation, the inverse correlation, come back in, and that could then send dollar CAD significantly higher up through these targets, and maybe up towards 134, even 136. This has been Steve Murray, the Market Chartist, on behalf of ForexFraud.com, and I wish you a great trading week.